Thanks for tuning in for more stock market news updates. For more videos on the latest stock news, press the like button and subscribe. With that being said, let's dive straight into the video. The stock market is weathering its third consecutive weekly slide, signaling a challenging period for investors and marking the index's most pronounced downturns since February. As market participants grapple with the implications of this decline, the upcoming week promises to be a pivotal one, as two major events with significant market-moving potential loom on the horizon. These events would include Nvidia's highly anticipated earnings announcement and Federal Reserve Chair Jerome Powell's annual speech at the Jackson Hole Fed Conference. On the other hand, the retail sector's performance remains nuanced, reflecting evolving consumer behavior. While consumers show a penchant for spending on experiences, there remains a notable interest in apparel purchases. Retail sales in July received a welcome boost from clothing outlets, with discount retailers such as TJ Maxx, Marshalls, and Ross exceeding expectations by offering budget-friendly options. As Urban Outfitters and Abercrombie & Fitch prepare to report positive revenue gains, other companies like Gap, Kohl's, and Macy's are bracing for potential year-on-year sales declines, so you should adjust your investments accordingly. Speaking of drama and declines, the United Auto Workers Union is negotiating contracts with industry giants General Motors, Ford, and Stellantis, so tensions are running high. The UAW is poised to hold strike authorization votes, potentially leading to strikes against all three automakers if an agreement isn't reached by mid-September. A widespread strike could exact a substantial toll, amounting to billions in financial losses for both manufacturers and workers, while also disrupting the broader auto industry. It seems that strikes are trending these days because Hollywood's labor disputes have cast a shadow over the entertainment industry, with the Writers Guild of America and screen actors also engaging in strikes. The recent deal offered by studios, backed by Netflix and Disney, addresses critical issues such as AI protections, streaming transparency, and higher compensation. However, the economic consequences of these strikes are already profound, with California's economy enduring a staggering $3 billion loss due to a disrupted production schedule. This leads to further delays in the production of popular movies and TV series, further contributing to the content shortage faced by studios. For individual stock news, Nvidia, ticker symbol NVDA, prepares to unveil its second quarter earnings, while Wall Street's excitement is reaching a fever pitch. The tech giant stock has surged nearly 200% this year, making significant contributions to multiple stock market indexes. As Nvidia finds itself at the heart of the AI revolution, its advanced chips play a critical role in the growth of artificial intelligence applications. Analysts are rallying behind the company, expressing confidence in a bullish outlook for Nvidia's earnings. The trend of beat and raise results, where earnings surpass expectations and outlooks are revised upwards, has analysts and investors brimming with anticipation. Undoubtedly, Nvidia is poised to deliver impressive results, with analysts projecting record levels of both earnings per share and revenue. The weeks leading up to the earnings announcement have witnessed a flurry of analysts raising their price targets for Nvidia's stock. However, with expectations soaring so high, there's a risk that even strong results could be perceived as falling short, potentially impacting the company's stock and the broader market sentiment it influences. The outcomes of Nvidia's earnings announcement carry significant implications, given its substantial contributions to market performance this year. With a slew of other companies, including Lowe's, Snowflake, Macy's, and more, also reporting this week, the market is set for a dynamic week of reactions and potential shifts. We also see that XPeng, which is a Chinese electric vehicle manufacturer, is navigating a crucial juncture in its journey toward profitability. A recent upgrade by BofA Securities underscores the company's potential as it seeks to achieve positive free cash flow by 2025. XPeng's collaboration with Volkswagen and its advancements in self-driving technology are pivotal factors driving its path to profitability. XPeng's efforts to achieve this milestone have garnered increased attention, with analysts projecting that the company's strengthened financial position, bolstered by Volkswagen's investment, could pave the way for sustained profits and cash flow. XPeng is vying to join the ranks of EV giants like Tesla, BYD, and Li Auto, which have demonstrated their ability to generate free cash flow consistently. These companies' success is reflected not only in their financial performance, but also in their substantial market valuations. As XPeng charts its course toward profitability, investors are watching closely. With the EV market evolving rapidly and demand for sustainable transportation solutions on the rise, the company's ability to deliver on its goals will shape its future trajectory and influence investor sentiment. In other EV stock news, Tesla, which is a trailblazer in the electric vehicle industry, is navigating market turbulence as it experiences a series of fluctuations in its stock price. The recent six-session losing streak, coupled with oversold technical indicators, triggered a reversal as the stock showed signs of rebounding. However, the EV giant is not immune to broader market concerns, including uncertainties surrounding demand in a rising interest rate environment. Technical signals suggest that Tesla's stock was oversold, prompting a potential correction that spurred the recent upward movement. Despite this rebound, lingering worries over demand and economic uncertainties continue to cast a shadow over the company's performance. Tesla's stock has become a bellwether for the EV sector and the broader market. As the company navigates market challenges and strives to maintain its growth trajectory, the extent to which it can weather these uncertainties will influence investor sentiment and market trends. In other EV news, Nikola, a prominent electric truck manufacturer, faces a series of challenges, including a voluntary recall of more than 200 electric vehicles. The recall could result in significant expenses for the company and disrupt its production timeline. Additionally, Nikola has announced plans to offer $325 million in senior convertible bonds through a registered direct offering. The recall of EVs and the uncertainty surrounding production resumption pose immediate challenges for Nikola. The company's ability to manage these challenges effectively will shape its reputation and financial performance moving forward. Amid these challenges, Nikola's financial maneuvers underscore its commitment to navigating the current landscape. The company's strategic decisions and responses to these hurdles will undoubtedly impact its trajectory in the competitive EV market. In technology news, we have Palo Alto Networks. This company is a key player in the cybersecurity landscape and has exceeded expectations in its fiscal fourth quarter earnings report. The company's robust performance extends to its first quarter profit forecast, indicating continued growth and resilience in the cybersecurity sector. Palo Alto Networks' positive outlook is reflective of the increasing importance of digital security as organizations and individuals grapple with an ever-expanding digital landscape. With cyber threats becoming more sophisticated and prevalent, the demand for robust cybersecurity solutions is at an all-time high. The company's projection of 17% to 19% growth in billings for the first quarter underscores its strong position in the market. As Palo Alto Networks leads the charge in providing essential cybersecurity solutions, its performance serves as a barometer for the industry's health and resilience. Lastly, we have Meta Platforms, which is the parent company of social media giants Facebook and Instagram. This company is set to launch a desktop version of its microblogging app Threads. Competing with X, Threads aims to recapture user engagement after experiencing a decline in recent weeks. Threads garnered rapid popularity upon its initial release, amassing 100 million downloads in record time. However, a waning interest led to a decrease in its usage. The introduction of the desktop app could potentially rekindle user interest and drive engagement, further solidifying Meta's position in the social media landscape. The launch of Threads' desktop version aligns with Meta's efforts to innovate and adapt to changing user preferences. As the social media landscape evolves, the success of this move could have ripple effects on Meta's user base and engagement metrics. Amid these multifaceted developments, investors are called upon to balance optimism with cautious realism. The market's response to these events will illuminate the delicate balance between anticipation and market realities. As we navigate the complexities of the financial world, the upcoming week holds the promise of insights into our evolving investment landscape. With that being said, I wish you happy investing.